Should you be buying in Townsville right now? It is one of the most talked about regional markets as a resi investor in the country right now, but prices have run hot over the past few years, and interest rates still being elevated. Many investors are now wondering, is Townsville still a good buy in 2025? Here is the May edition of Should You Be Buying in Townsville in 2025 by Handle Property. Hey everyone, my name is Nick. I'm a director here at Handle Properties. We're a boutique buyers agency that help investors secure properties between that $400K to $1 million mark. We've completed over 80 deals, and both AJ and I, the directors of the business, are experienced investors ourselves, each with multi-million-dollar portfolios worth more than $5 million each, all built while working corporate jobs and on single income. We've bought many properties in North Queensland, including Townsville, and in this video, I'm going to walk you through what is the latest data telling us in Townsville. Of course, the flood risks are quite big in this area, and it is something to be mindful of. The massive infrastructure pipeline that's coming up in Townsville, the financials of what it actually costs to hold a property in Townsville in today's market, and finally a verdict on whether it makes sense for investors to buy in Townsville in 2025. Now let's get into it. The first thing to be mindful of in this analysis is we always go back to the brief. What is considered a great place to buy or an investable suburb is different for every single person depending on their brief. So for the purposes of this video, our analysis is being conducted on the basis that the budget to buy is up to $600,000 plus costs. We need to extract equity pretty confidently and a meaningful amount within 5 years, ideally much shorter, within 12 to 24 months. Our hold period for this asset is at least 10 years, so we're not looking to buy something and leave it in 2 or 3 years. It is still a long-term investment hold, and our operating budget to hold this property must be below $1,000 a month or $250 a week. So let's get into it. Running through the data, Townsville has incredible run over the last 5 years. As you can see, property prices have been up almost 30% in the last 12 months, and rents have been up about 10% in the last 12 months. Median house prices in some areas have even gone up more than that, 30, 40, 50% over the last 3 years. Vacancy rates are extremely tight in this area. As you can see here, vacancy rates are under 2%. So again, pretty strong. Days on market, again, very, very strong in some of these areas, under 2 weeks. And as you can see, rents have been climbing. Over the last year, in some areas, up to 7 to 8% rental increases, and in 3 years, more than 30% in rental increases. And you can see here, over the last 10 years, the properties have really performed incredibly strong. In some cases, doubling or more than doubling over the last 5 years. But the interesting thing here is that over the last 10-year period, property prices are still underperforming the long-term regional Australian average of 7% a year. Now, before you even get started in shortlisting properties in Townsville, there is a major issue, obviously, with all of the flood risks that happen in Townsville. And there's a council map where you can go through. It's called Townsville Planning Flood Mapping Service, and you can start putting in addresses here, and you can actually see whether or not a particular address or a particular point is actually flood prone. So you can see here, it is very much a flood prone area. And because of that, it's something to be mindful of, but to not be scared of. The roads are designed to flood in the modeling. So you'll see here, the roads are designed to take up at least 30 centimeters of water, and the newer suburbs are actually elevated. They're about sloping upwards slightly away from the road so that the road can capture any excess water and drain it away. So it's super important to be buying not in a flood zone, and also checking, of course, that your property is not in a major green or red area, because again, these are the same maps that are used by the insurance companies, and that will vary the insurance premiums on your property. So shortlisting the suburbs and then shortlisting areas that are pretty strong to invest in. So after shortlisting the suburbs and then removing all the properties or the areas that are flood affected, you can come together with a pretty concrete list of suburbs that are pretty strong. And let's just run through some of these equations and let's just run through some of these things here. So if we are looking for a yield that is greater than 5%, we are looking for vacancy rate less than 2%. And just as a start, using some very, very basic filters, you can kind of see a very interesting list of suburbs that you can start to consider to buy within that $600,000 mark that have at least some of these core filters applied. But it's always scary to be buying into a market that's gone up by 30% in the last 1 year or 40% in the last 5 years. And yes, you are buying at the peak. You know, if I were to bring up a place like Tier 1 in Townsville, again, very much a place where BAs and residential investors buy, you can see here that it is very much at the peak of the cycle. You know, it's forecasted to start dipping. But that being said, it is coming from a very high base. If the area did 26% capital growth last year, and in the last quarter it did 2.5% and, you know, almost 0.5% a year, this is not going to be a negative result. It's likely to land in that 7, 10, or 15% mark over the next 12 months, especially factoring in the interest rate cuts, which will give it another boost. So as you can see here, though we are at the peak of the cycle and the cycle is decreasing, we still have positive forecast for capital growth coming through. Now, again, this is all coming from a software service called HTAG, which you can sign up to. It'll give you some guidelines in terms of looking for areas that you can invest in. But you must overlay your personal investment beliefs about a particular area and your own due diligence and your own research on the fundamentals. And what we want to bring to you today is one perspective on this, which is the infrastructure projects. So though you might be buying into the top and into the peak, it's very important to understand the Townsville that is being built today and of the future is very different to the Townsville of 10 years ago where property prices lagged. And as you can see here, you can see there are millions and billions of dollars worth of investment that has already been underway. But if we look at those that are coming up in the next 5 years, you've got a $530 million hospital expansion. So again, multiple jobs coming through during the construction phase, due to be finished next year. But just think about what that's going to do. A bigger hospital with 143 new beds, which is going to attract more nurses, more doctors, more medical technicians, more hospital administrators, and just think about what that will do to the local economy in that space when you get high-skilled, educated workers attracted to this particular region. But diversifying away from that, you can kind of see there are some really interesting projects going on in the green energy space. There are very large numbers being thrown out. This is all underway, but still yet to be in the midst of the development cycle. But if these big numbers are being thrown around in a place as small as Townsville, has about 300,000 population, that's a pretty meaningful investment on a per capita basis. So again, going back to the fundamentals, though you might be buying at the peak, you kind of have to think about if your investment horizon is again for the next 10 years, look at all these investments coming in. The Townsville of the next 10 years is going to be very different to the Townsville of today. So running through the financials of how much it would cost to buy and own a property in Townsville, let's bring up a simple or a recently sold property. So you can see here, you can buy a property sold literally today, 23rd of May, for $420,000. So sub $500,000 transactions, right? Yes, you're buying at the peak, but you're buying at a low base still. Like beautifully renovated, nice home, $420,000. So sub 500, definitely possible in Townsville in the current market. But for the numbers' sake, let's go up to the peak and let's look for a property in that higher range and do the numbers to kind of show what it would cost to own a property in that higher amount of the budget. So $590,000. Let's start with this. So this is a property in Kirwan, $590,000 at 188 Bamford Lane. Obviously, as you can see, incredibly well renovated, neat, tidy. You won't have any issues getting a tenant in here. It is a low set brick home, renovated, do the flood check, but purely for the financials. If we were to bring this up just to get some indicative ideas of rental yield, so the median rent for something here is also around $600 per week. So let's plonk in those numbers. So $590,000 purchase with a 20% deposit at, let's just do the same at $600 a week in rent. Adding in all of your transactional costs, your deposit, you will need $172,000 in cash or equity to get into this transaction. At this rental yield, it reflects a 5.3% rental yield. Again, being very conservative because this is a 5-bedroom, newly renovated house. You could probably get more, but being conservative, 5.3% grossed up rental yield, including all of the costs typical to buying in Townsville. Water rates and council rates, traditionally more expensive. And we always put an allowance of $3,000 for general repairs, and insurance, again, more expensive compared to other parts of the country. I would be budgeting at least $4,000 a year. And again, make sure it's not in a flood zone, because it's very possible that Townsville properties in a flood zone can be $7,000, $8,000, or $12,000 a year in insurance, which will completely ruin your financial metrics. And as you can see here, this property will cost $15,000 a year to own, or $1,290 per month. Once you take into account, for a newly renovated home, you might be able to get maybe $4,000 a year in depreciation, and assuming a 37% marginal tax rate with a tax refund of $7,200, your out-of-pocket costs is $700 per month, which is less than $250 per week to own a home right in the middle of Townsville, super well connected. I mean, it's Townsville. You can travel anywhere within 20 minutes. Newly renovated, low set home, brick home. Not obviously, don't look for one in a flood zone, but in a location where there is just this much going for it. Super diversified, lots of infrastructure investment coming in. So going back to our verdict of whether or not should you be buying in Townsville, it again comes back to your brief. If you need equity quickly, but you have a long-term investment horizon and a very, very limited operating budget, there you go. That Townsville might be the place for you to buy. So now onto the verdict. Now, before I give you my take, a quick reminder. This is not specific advice for you. I obviously don't know who you are specifically. I don't know your specific financial situation, your strategy, goals, or your risk tolerance. So always do your own due diligence or work with professionals like myself who can help you assess your specific brief and what it is that you are trying to achieve. That said, here's what we're seeing at Handle Properties about Townsville. Townsville has experienced very strong growth over the last 3 to 5 years. It's obviously at its peak. Most of the steam has already been put into the market. It's starting to show signs of softening. It's not a crash, but it is a slowdown. But it's likely that we are at the peak of the cycle, but that does not mean there's not going to be negative or substantially low growth in the immediate short to medium term. So we're saying within the next 12 to 36 months. And the reason for this is zoom out, and if you look at the long-term fundamentals, it's incredibly strong. The infrastructure is incredibly diversified, and the dollar values on a per capita basis are just massive. It's also an incredibly diversified economy in its own right. It's got a major defense station, it's got a teaching hospital, a major university, and of course, all of the mining adjacent jobs that come with, and of course, all of the mining adjacent jobs that come with working in North Queensland. We really believe the Townsville of the next 10 years will be fundamentally different to the Townsville that people are used to from the last 10 years. So if you're looking for strong yield, low out-of-pocket costs, and good long-term growth potential, and happy to hold the property for at least the next 10 years, and are comfortable with extracting out some equity in the short to medium term, and are okay with having regional metro exposure but with national significance, Townsville may be a solid opportunity for you. So at Handle Properties, we're a buyer's agency focusing in that $400K to $1 million range. We've bought plenty of properties in Townsville, and we're still active in the market, subject to the client's brief. In fact, we're seeing 20 to 30 off-market deals that run across our desk every single week in this region. We've built strong local networks. We know how to filter the best opportunities. We know where the floods come. We know where the poor streets and the investor saturation is. So if you need help sourcing the right kind of deal in North Queensland or shortlisting high quality properties or suburbs around the country, first, have a look at our videos, plenty of free information there. But if you need the actual advice and service or a do-it-for-me solution, head over to our website, click on Start Investing and schedule a call with us. We're happy to take you through how we operate, obligation free. Remember, this is your money and make it count.